Hello and welcome to NDTV Profit. You're watching KYC. We're talking about a company which is into defense. A lot of other aspects in and around it as well. And yes, we're talking about PTC Industries. I'm Hiral Dadia. With me is Anushi Vakaria. It's an interesting company to watch out for with the kind of growth and capacity expansion that they are doing, Anushi. But let's quickly address the few key questions to which we want answers to. First up, what is that strategy looking like? What are the barriers of entry for this company, as titanium and alloy manufacturing is the key for this one as well? So this is a question that we are going to ask the management. Moving on, if you talk about the big capacity expansion that they are looking at, the plans there and the kind of revenue potential that the company is looking out for on the back of the capacity expansion. And very lastly, you're seeing aerospace casting facility and vacuum arc resmelting. That is VAR, that is what is of significance from here on. The third important aspect that we're going to consider is the significance of the strategic materials technology complex, which is built in Lucknow for the sector as a whole, because PTC Industries does operate in this segment as well.
Well, Hiral, this is the key aspect as to the growth prospects of the company as well. But other than that, what we are looking at is the recent acquisitions also, which are in focus, and that has played the impact in the first quarter as well. So how these recently acquired companies have done, and the future also, if there are any plans as such, is something that we'll be seeing. Apart from that, we are also looking at opportunity from leading global OEMs in focus, and this includes the likes of Safran and Kineco as well, because significant order opportunities from here onward. Now, what's important is, considering these high capacity additions are taking place, what is the guidance for not just FY26 but for the next 5 to 7 years of outlook as well? 3 year, if we see, it's 20% or so, but the main takeaway is the next 5-year picture in perspective. Along with that, the order book target for, with these new orders coming in from BrahMos as well, what's the kind of outlook that we'll see for future next 5 years or so also is something that we should be watching out for.
Strong questions to ask the management.
Absolutely.
But let's tell our viewers what the company is all about. It's a company incorporated back then in 1963. They're mainly into manufacturing of engineering components, and this is of steel and titanium castings. These components are actually used for aerospace, defense, and the industrial sector. If you talk about the products and materials, they specialize mainly in compounds which are made from advanced materials like titanium superalloys, which is nickel and cobalt based, stainless steel, and duplex steel. The key industries they serve is very interesting, Anushi.
Absolutely. We are seeing titanium as a niche product which is being made, and PTC playing a big part in it is something which is beneficial for the aero and defense segment. Now, a lot of these new orders coming in from HAL, and PTC playing a big part in this is something that we should be watching out for. But other than that, we also have oil and gas, LNG processing, along with that even marine pulp, paper in focus. So these are a couple of industries, Hiral, that we are looking at which are in focus.
And a strong global presence is what we're talking about over here when it comes to PTC, because they're exporting nearly over 75% of their products to global customers, and you have global clients like Rolls-Royce, Siemens, GE, and Alstom. These are the key companies that they cater to as well.
But just on to the clients that we are looking at, they've had some recent agreements as well in focus. Now, this includes them signing a MOU with the Safran aircraft engines as well. Now, this is to develop military aircraft engines that we are seeing. Along with that, Kineco is another MOU that we are seeing in focus, wherein the company will be developing these value-added aerospace components as well. BrahMos, they've had an association since 2019, and they've recently also announced a 100+ crore of an order from there. So these are, a couple of other interesting aspects that we are looking at.
Right. So with all of this, let's quickly understand, what are the key parameters that we at NDTV Profit are going to consider from here on. First up, you're talking about the income statement. That is going to be a key that we will be looking at. Balance sheet, cash flow, and return ratios. Apart from that, in terms of your other ratings, you have shareholding patterns, street credentials, valuations, and your street coverage and outlook. These are the ones which we will be dissecting as well. But moving on, if you talk about the income statement, the strong and positive trend that we've seen in the income statement is over the last 3 to 4 financial years, from FY22 to 25. This has mainly been driven by growth in revenue and a significant expansion that's come in terms of profitability as well, from 42 crores to 61 crores, a 3-year compounded growth of nearly 68%. Now, the strong growth in revenues with the operating profit, which is nearly doubled from FY22 to almost 73 odd crores in FY25. The net profit has also seen exceptional growth, which has increased nearly 10 times. So that is a key positive. This has led to a rise in the EPS of the company. The margins have improved, which is actually indicating that the new advanced manufacturing and technology focus, which is especially in titanium and superalloys for aerospace and defense, is commanding higher margins. And their focus on critical and supercritical applications is niche, is clearly playing out. So that's with regards to the income statement, and over the past 3 to 4 years, it's showcasing a strong growth and a transformation phase, and hence a thumbs up.
Well, Hiral, these improved financials in terms of your net profit is also reflecting in the balance sheet as well, and that's the second component that we are bringing to your thumbs up over here as well. We are seeing a significant uptick in terms of your other equities, which is also there. In fact, you can see the book value, which has been rising consistently over the years. Along with that, if you look at the borrowing, now that has come down from a 177 crore of a figure that we saw in FY23. This is now reduced to about 61 crore. This is against the cash balance, which is in focus, which is on the other rise, increasing from a 30 crore, we are looking at about 382 crore of a cash and bank balance. So a thumbs up is what we give the balance sheet.
Right. Let's look at the cash flow. The company is in the face of aggressive capital investment, primarily funded through a major injection of financing, including equity. In fact, the cash flow from investment is consistently negative and dramatically increasing in magnitude, which is a sign of a company in a major growth and expansion phase. In fact, the CFF has been strongly positive, accelerated rapidly as well. And if you talk about FY25, you're almost talking about 550 odd crores. But the picture that you see in terms of the net cash flows, that is a strong number at 55 crores. It actually went up to almost 127 odd crores in FY24 as well. And in FY23, you saw a single digit, and hence a neutral rating that comes in from our side.
In terms of return ratios, if we are looking at now here, we are seeing a downtick from how the FY23 to FY25 trajectory has been from a double-digit number. Now that has gone down to about 6% to 7% of a range that you're seeing for FY25. We've given this a thumbs down right now, but do keep in mind that there's a lot of ongoing capex for the business. We'll talk about the capital expenditure plans as well, with the complex that the company is building in Lucknow. So for now, while there is a downtick that we are looking at, it's the upcoming fiscals, where we should be focusing on more in terms of how these return profile pans out. So that's the overall take on return ratios that we are seeing.
Absolutely. In fact, the promoter holding, which is the shareholding pattern, is the key from here on. Largely stable in the recent quarters. Crucially, if you talk about the percentage of pledged shares also by the promoters is reported as 0, which is also a very positive sign. FIs and DIIs, now this segment has shown a consistent healthy increase in the recent quarters, which is often seen as a positive indicator of increasing confidence in the company's long-term prospects. And that's the reason why we've given it a thumbs up.
Absolutely. Now coming to the street cred part of it, we've given this a thumbs up as well. In the 1 month to 6 months, it's on 7 to 9% of a return potential, a return upside that we've seen. But in the last 2 years, a significant multi-bagger for all those investors out there, with the stock surging more than 5 times. So it's a thumbs up that we've given for this one, right?
And let's look at the valuations. Now, a primary indicator of the market valuation, which is relative to earnings, that has experienced a massive expansion, climbing up. You can see on the screens, you're talking about a PTC Industries where 1 year forward is around 238 times. The 2 year forward normalizes at around 34 times. In fact, it also ballooned to 372 times in the recent past. This signifies a dramatic increase in the investor confidence and expectation of future growth of the company. If you talk about the market, which is willing to pay a significant higher price for each rupee of the company's current earnings, is suggesting that the stock is actually perceived as a high growth, high potential investment. The valuations do appear very expensive when compared to the sector median or historical norms as well. And this is likely attributable to your exceptional earnings growth, the multi-fold increase in net profit and EPS that the company has delivered as well, and the strategic developments that we are seeing.
In fact, you'll just hear in some part, with the kind of revenue potential seen in the next 5 years, why these valuations are so expensive, and 2 years, what's the trajectory. But onto the outlook forward, now what we are seeing is that the company has already commissioned about 1,500 tons per annum of their vacuum arc melting capacity in Jan 25. 5,200 is the overall size that we are looking at. And this is by the end of the fourth quarter that we are seeing. So significant capex plans over here is what we are looking at. Now the company is also creating a whole titanium ecosystem in terms of, from capacity. They want to control all aspects of it, for which they've also signed a MOU with Odisha. So that is another interesting part. While analyst coverage on this particular counter is low, around 2 buys is what we are looking at, with a 24% of an upside potential. So that's the overall take in terms of how the analysts are seeing the stock and what's the kind of outlook forward that we're looking.
Thanks for that, Anushi. In fact, let's quickly look at the overall ratings that NDTV Profit has given a PTC. A 6 on 8, which is a very strong rating that PTC Industries has got from NDTV Profit, and we've already taken you through the various parameters. Meanwhile, Anushi also spoke to Sachin Agarwal, who's the chairman and managing director at PTC Industries, to understand the business outlook, the capex plans, and the guidance and the growth that they have going ahead. Let's listen in.
This is a very, very niche area, but a very, very highly potential and profitable area. So when we're looking at our company, there are basically two streams. One is our titanium materials and component stream, and the other is our superalloy stream. In the titanium, as you rightly said, there is very huge barriers, both technological barriers, know-how, as well as capacity, as well as investment barriers. This capacity that we are setting up is a full end-to-end value chain, starting from manufacturing of titanium alloys, materials, into various, and then conversion to various forms, right from various mill products, from bars, rods, sheets, plates, forgings, and to castings and machining them as well. So it's a very, very big investment covering, for the first time in the world, at a single site, this entire value chain from material manufacturing all the way to machined components which are ready to fit in any aerospace as well as defense applications. Titanium, as you know, has a huge application throughout the civil aviation and aerospace sector, as well as throughout all the platforms in defense, whether it be land-based, sea-based, air-based, aero engines, as well as space, as well as strategic systems. So this whole strategic initiative that we have taken is being set up in our new strategic material technology complex in Lucknow in the UP Defense Corridor. It has a huge investment, but the potential for this is the capacity for material side of the titanium is being set up for around 6,000 tons to 6,500 tons annual capacity as phase one. Then we have a huge capacity for castings. So the potential in the next 5-6 years is that we probably in this sector alone in titanium stream would be in the region of around $300 to $400 million in top line. Again, it's a very niche area. So as I mentioned, there are very, very few players globally. Hardly 4 or 5 companies in the world make titanium materials, and hardly 3 or 4 companies in the world make titanium castings. So again, very, very niche area that's leading itself to a very high EBITDA margin as well.
Mr. Agarwal, just want to understand on that, in the next 3 to 4 years, while we are seeing a big outlook in terms of these new capacities being on stream, in September only you've described about the recent commissionings. Talk to us about that. For FY26, what's the kind of outlook that you have in terms of capacity addition? And in phases also, if you can describe about 27, 28 as well.
Yeah, very good. The recent announcement we did, very back-to-back announcements within a month, is one setting up of a capability of vacuum induction melting for large superalloy castings. Then what we did last week, about a week, 10 days back, is commissioning of our large titanium casting facility. Now, if you're looking at India's aspiration, as Prime Minister Modi has said, that to make aero engines in the country. Now, aero engines require certain type of materials. For aero engines, almost 70 to 80% of the materials that go on any aero engine is either titanium or superalloy or nickel-based or cobalt-based. Now, when we are talking about making the country self-reliant in aero engines and production of aero engines in the country and things like that, strategic systems like that, then certain technologies, core technologies, become very important for the country. One of them is being able to make these large titanium castings and superalloy castings, which go on the engine on both sides, on the turbine side as the turbine rear frame, and on the compressor side as the fan-up frame, as well as in the middle, which is the fan, is the intermediate casings. These are large precision investment castings in titanium and superalloys. There's only one other company in the world which has the capability to make large titanium and superalloy castings. That's in the US. And we become the second company in the world to have both these capability for making large titanium superalloy castings. So it's a very significant milestone for the country. I believe that is where the country is heading towards, and to make the country self-reliant in true sense. These are the core technologies that we are setting up and making the country on par with the rest, with the best in the world.
Mr. Agarwal, while I do understand the area is very niche in particular and there's applications across user industries that we are looking at, just want to understand on the overall investment size that you have in plan, what's the kind of capex that we are looking forward? How much is it, how much of that has been utilized in FY26? What's the kind of outlook that you have for 27? And even in the near term, if you can give us a picture.
Yeah, so CapEx that's ongoing currently in our strategic material technology complex in Lucknow in the UP Defense Corridor is in the tune of approximately 1,000 crores plus. Though this 1,000 crores is what we are saying, but all these equipment were ordered more in the COVID times because they have like 3-4 year lead times. And because of that, we got very good pricing. So anybody who wants to set up such a current investment currently would be in excess of 3,000 to 4,000 crores. That's how the prices have increased. So first of all, our investment size, even at around 1,000 crores, is equivalent to actually an investment of in excess of 4,000 crores in today's time. In terms of and other terms, in terms of 26, 27, our investments in this entire strategic material technology complex, we are setting up currently 4 facilities. One of that is titanium and superalloy melt facility. Another is titanium and superalloy forging and rolling mill facility. Then third is titanium and superalloy and airfoil, including single crystal castings and DS casting, another very important technology, core technology required for aero engines and aero engines. That's the third facility, casting facility, and the fourth is the machining facility. So all these facilities will take by the end of 26. 3 facilities will be ready, and the machining will be ready in year 27.
Right, and just a quick take on, how is this, capex that you have, it's a big number that you've given in context. How is that being funded? Do you see any other fundraising on table for this particular area?
In the current capex that we're doing, we are fully funded. All the money we have, either through debt or equity that we raised. So we are fully funded for the current investment cycle. In the future, if other opportunities come by, we will take a look at that time. But currently, for this project, we are fully funded.
Okay, thanks for that clarification. Now, if we come to the financial performance, in the last 3 fiscals, we've seen about a consistent performance in terms of how revenue has shaped up. But just want to get a sense in terms of the larger picture, which is there in the next 5 years, in the 7 years, what's the kind of revenue potential that you have on table, considering these huge capacities are going to be on stream from FY27 onwards, the majority of that being taken in effect from that year onwards. So if you can give us an outlook in terms of the revenue number that we are projecting. Also for FY26, if you can get us an outlook in terms of what's the kind of growth that you anticipate, since you already want 100% of a jump because of the recent acquisition also that we are looking at.
Yes, Nishi. So for this FY25-26, as I mentioned previously, we are looking at almost close to a 90 to 100% growth compared to the previous fiscal year for this financial year. So we'll probably almost close to doubling what we did in the previous year in this financial year. But looking forward, I think in 5 years, 7 years time horizon, there's going to be a major hockey stick kind of a growth coming from at that time. In this 5 to 7 years, we are looking at close to 10x to 15x growth compared to the previous financial year in the top line, and a very solid EBITDA margin on top of that as well.
Just let me get this straight. 10x to 15x is the kind of projection that you have over FY25, I believe.
That's
in
right.
the next 5 years or 7 years, right?
That's right. That's right.
Well, that's a huge outlook in terms of what's happening with PTC Industries. Just want to understand, with this 10x, 15x growth that we are seeing, what's the kind of margins also that we'll watch out for? If you can give us a blended range in terms of margins also. For FY26 also, I want to understand, because, in the first quarter, we had seen a dip in because of, the track precision which was there. So just want to get an overall perspective on that front as well.
And very good, Anish. Yes, you're absolutely right, because Track Precision is the company that we acquired in UK. Because of that, the blended margins were reduced. But Track Precision is undergoing a massive increase in capacity. We are investing significantly over there as well. We are winning many orders. In fact, Track Precision is also, we are planning to almost triple the revenue in Track Precision in UK over the next 5 to 6 years. So for that, investments are going on. Of course, for the next 1 year, there's a lot of changes that are happening, which will keep on pressurizing the margin over there. But overall, blended margin over the next 5 to 6, 7 years is in the region of excess of 35% as a blended margin overall in the company when we have this 10 to 15x growth.
Strong commentary from the management. A 10 to 15 times jump in revenues over the next 5 to 7 years, margins to exceed 35% in the long term, and order book of 1,000 crore to rise substantially going forward. That's the key takeaway from PTC Industries. Completely out of time with that. It's a wrap on this edition of KYC, only on NDTV Profit for your profit.